Welcome to your daily market briefing. I'm here to bring you up to speed on what's moving the financial landscape today. We're seeing a mixed picture in the US stock market. The S&P 500 managed to eke out a gain, up by a modest 0.4%, closing around 5,631. Now, this recovery follows some earlier volatility that we saw during the day, which stemmed from Justice Department testimony related to Alphabet. It's important to note, though, that despite today's positive close, the S&P 500 is still down by 1% for the week. The Nasdaq also finished the day in positive territory, gaining 0.3% to close near 17,738. And similar to the S&P, the Nasdaq did bounce back from some morning dips, but it's also down for the week, currently by 1.3%. The Dow Jones Industrial Average showed a bit more momentum today, closing up 0.7% at approximately 41,114. This suggests we're seeing some pockets of strength in the market, perhaps outside of those communication services sectors. Let's take a look at some key individual stock performances. Apple saw a slight dip today, closing down about 0.22% at roughly $198.45. We also watched Tesla experience a more significant decline, falling around 1.74% to finish near $275.37. This drop for Tesla is reportedly influenced by news of slowing new car sales in some key European markets. Shifting our attention to the cryptocurrency market, we're seeing some vigor. Bitcoin is trading significantly higher, up by around 3.2%, and it's currently at approximately $96,805. Ethereum is also in positive territory, gaining about 1.15% to trade near $1,796. Now, let's get to the latest economic data. The most recent weekly initial jobless claims, which were released last Thursday, showed an increase to 241,000. This increase exceeded expectations, and it suggests that we may be seeing a slight softening in the labor market. The latest consumer price index data for April indicates that inflation pressures remain somewhat sticky. And adding to this, we've seen that one-year household inflation expectations have climbed to 6.7% year over year. This is the highest level we've seen since 1981, and it underscores the persistent concerns about rising prices. Yesterday, the Federal Reserve concluded its meeting, and they decided to hold the federal funds rate steady. However, Fed Chair Jerome Powell's subsequent commentary really highlighted increased concerns about rising risks to the U.S. economy. In particular, he focused on the potential for sustained tariffs to fuel both higher inflation and higher unemployment. Now, while the Fed acknowledged that the data hasn't yet reflected these impacts, their cautious stance signals a more watchful approach moving forward. It's worth noting that the minutes from this Fed meeting will not be released until Wednesday, May 28th. Here are some of the top business headlines shaping the day. First, the Federal Reserve is signaling heightened economic risk concerns, even as they hold rates steady. The Fed's cautious tone regarding the potential impacts of tariffs is a key market driver today, and it suggests a less certain path for future monetary policy. Second, Google shares are under pressure following Apple executive testimony. News reports indicate a significant drop in Google's stock price today, triggered by potentially damaging testimony from an Apple executive in an ongoing legal battle. Third, the U.S. and China have agreed to resume formal trade negotiations. In potentially positive news, the U.S. and China are set to restart formal trade talks this weekend in Switzerland. This development could offer some relief from those tariff-related anxieties that we've been discussing. Finally, I want to mention that no major presidential press summaries with significant market implications were released today. However, the ongoing investigation into alleged unlawful foreign campaign contributions continues to be monitored for any potential market-moving developments. In summary, today's market is navigating a landscape of mixed stock performance, a rebounding crypto sector, and a Federal Reserve that is expressing increased caution about economic risks, particularly those related to potential tariffs. Investors should keep a close eye on upcoming economic data and developments in trade negotiations. That's your market update for today. Stay informed.